financial markets opened the week mildly lower and helped the dollar and yen recover slightly. In the Eurozone, some mixed reports came from the German newspaper, Der Spiegel. On a positive note, the newspaper reported that the EU members are planning to allow the ESM to leverage its capital in the same way as the EFSF, so that the former can reach a capacity of more than €2 trillion and to rescue big countries if necessary. Yet, the newspaper also reported that, albeit preliminary, the Troika estimated that Greece has pointed to a budget gap of €20 billion, doubling the previous projection. According to Der Spiegel, the debt-ridden country can only get the next tranche of funding if it narrows the gap. Meanwhile, there were reports that Greek Prime Minister Antonis Samaras has again asked the country's official creditors to take a haircut on the claims to their debts. When Spain would request to activate the ECB's OMT bond buying program, remains a focus of the markets. ECB Executive Board member Asmussen said in a newspaper that the ball is in Spain's court. And he emphasized that countries now have to meet strict conditions before the ECB takes any action. Nonetheless, he also hailed Spain for having done much with extensive labor market reforms, even though the country must still do more to restructure banks. German Finance Minister Schäuble said last Friday that Spain doesn't need a bailout though. Markets are expecting Spain to announce a plan that focuses on structural reports on September 27. Another ECB Executive Board member said that the jury is open as to whether there should be another rate cut. He said that a detailed analysis is needed about cutting deposit rate below zero would over into different market segments, and whether money markets could function at negative rates. Also, there could be limits to efficiency of a further cut in deposit rates. Coer acknowledged that the euro area economy is weak, certainly with sluggish growth in 2012 and 2013. Meanwhile, inflation is expected to go down but only at a relatively slow pace. Coer warned that some persistence in inflation data in the euro area warrants caution. Meanwhile, he said the euro has turned the corner on confidence and perception and has conditions in place to restore growth. The China Beige Book, covering the period from August 9 to September 3, showed that growth of manufacturing, trade and retail sales activities decelerated in the third quarter of 2012 and may record the weakest annual expansion in 22 years. According to Craig Charney, research director of the survey, the dramatic and unexpected worsening of the European crisis and slowing of America's economy brought China's export order growth to a near standstill. The manufacturing sector is found to have the biggest drop in companies reporting higher revenue and higher output. Job cuts are also expected to be more likely in coming months than previously. Latest CFTC data showed that euro net shorts continued to drop to 73,500 contracts on September 18, compared to 93,700 contracts a week ago. That's also impressive compared to 214,400 net shorts back in June. Sterling net longs seemed to be gathering some momentum and rose to 14,400, up from 4,000 net shorts. Yen net longs dropped back to 15,500 as yen longs failed to gather momentum above 30,000 contracts. Australian dollar net longs were relatively unchanged at 69,200. Canadian dollar net longs rose for the 8th straight week to 297,000.